AM Best is maintaining its outlook for the U.S. commercial line segment at stable, and this is supported by a number of key factors. First, we've seen persistently strong underwriting performance for the U.S. P&C commercial lines, despite substantial economic and capital market volatility. And in contrast to the strain seen in the personal lines marketplace over the past 2 to 3 years, this has resulted in outperformance by commercial and specialty lines insurers. We've also seen sustained risk-adjusted pricing strength for most classes of business and moderating inflation, particularly affecting property lines and helping to stabilize reinsurance costs and capacity. There's also been continuity in improved investment returns, especially in fixed income portfolios, which has bolstered operating profitability, especially in reserve and asset-intensive, longer-tailed casualty lines. Another consideration is that commercial insurers' reserve adequacy has been sustained overall, an important consideration for capital strength, earnings quality, and pricing adequacy, although with notable variability by line of business. In particular, although workers' compensation continues to deliver favorable, if diminishing, reserve releases, these have been meaningfully offset by adverse claim trends for accident years 2016 to 2019 in general liability and casualty lines generally, in large part reflecting social inflation trends. Finally, despite some notable softness in pricing in directors and officers and other management liability lines, as well as in the cyberspace and workers' compensation, we've seen fairly broad-based discipline in the sector regarding risk selection, terms, and conditions, as evidenced in part by the continuation of strong submission flow and sustained growth in the non-admitted or excess and surplus lines market. An additional consideration only now beginning to emerge is the impact of the recent U.S. presidential and congressional elections and continuing but possibly shifting domestic and geopolitical risks. The stable outlook reflects AM Best's expectation that the U.S. commercial line segment will remain profitable in aggregate and will be resilient in the face of near and longer-term challenges. It also reflects AM Best's view that the risk-adjusted capital of the majority of segment carriers will remain sound, and that the stable outlooks on commercial property and workers' compensation lines of business, and the positive outlook on the E&S market will be sustained over the coming year or more. These stable and positive outlooks continue to outweigh AM Best's negative outlooks on the general liability, commercial auto, and directors and officers insurance lines of business. In our published report, we also discuss distinguishing characteristics of the property, liability, and workers' compensation segments, and the need for continued vigilance by casualty insurers as regards emerging classes of litigation, climate-related exposures, and litigation financing.